1st of August 2020, and here we are where we see the Indian markets and gold are all running away. As a matter of fact, the Indian markets are just 10% away from the lifetime highs, and the gold is almost at its peak. The US markets are also very close to its peak. This brings us to the fact that usually equity markets run up when there is economic upswing, when there's economic boom. And gold markets run when there is uncertainty, when there is war-like situation, when there is a lot of tension globally. But then right now, it is funny that equity markets and gold both are running away, and there's only one reason to it is as Vidya Balan dialogue goes for entertainment, entertainment, entertainment. For us, for the markets, it's right now just liquidity, liquidity, and liquidity, and that's what putting it's what taking the market to its new highs. Right now, it's sort of for the Indian markets to be at this stage where we're just 10% away from the lifetime highs, is that India has a lot of things going for itself. We have to remember the fact that India is the pharma hub of the world, and India is also the IT capital of the world. And these two sectors are booming. There's no reason it should not boom, because these are the essentials. And India is getting a lot of inflows into these sectors. Um, Another reason is obviously economic reason is it's an anti-China scenario in the world, and India Make in India campaign of our Prime Minister Mr. Modi is also gaining momentum, and India has the capability to be the next manufacturing hub for the world, the next factory of the world, as they say. Not to forget a stable dollar, political stability, all those things, and players like Reliance who have taken into India into a completely different domain worldwide with getting the Facebooks and the Googles and all the other HNI investors into India's telecom or retail story. So India is in a sweet spot, but we have to be careful in what we do right now. A few weeks back, when we discussed, we had to be in cash to a certain limit. So between 8 and 10 to 12%, we are in cash, and it's important to be a little bit in cash to catch the downfall if we have one. We are trading close to 30 times PE, which is the highest. The most expensive has been this 30p ever. But see, market counts the forward. It looks at the future. So this financial year 2021 could be a sort of a challenging year, but 21-22 could be a decent year, and then the year after that could be even more better. So market is discounting the future, and the market feels that we deserve to be at a 2022-24 P in the next 2 years. As of now, speaking to a couple of friends, I was discussing about they were discussing about turnaround stories and value picks, and I feel that as of now, it doesn't. We don't have to be very smart in picking our stocks. The basic story could be the growth picks, the same old, the HULs, the Asian Paints, the HDFC Twins, the L&Ts, the Reliances, the Nestles, the Britannias, and the likes of that. These are decent plays in the market. Though there is one sector which appeals to me a lot, is the play of agri. Um, Farmer, the focus on farming is going to pick up, and be it agri inputs, be it fertilizers, pesticides. Agri inputs includes all the ancillary seeds and all, be it tractors, be it farm loans and all that. So these are the sectors which are gonna the pace is going to pick up on them. So that's one sector to be focusing on. And I feel that we don't have to be super smart to pick up the best stocks right now. There's ample of choices, be it the Rallies India, the Coromandel Fertilizers, the Escorts. Mind you, Escorts has run up a lot. The UPLs, these are the agri theme stocks which could deliver decent returns. In fact, the two wheelers like Hero Honda has a lot of rural presence, so that could be another decent area. So, all in all, I feel that it's time for us to be positive about a decent recovery in the next 6 to 8 months, and let's keep investing and make the most of it. Yep. Okay. Bye.